Earnings season is here, and next week is packed with quarterly reports. Before we dive into stocks, let's take a look at the latest economic signals driving the market. Welcome back to Navalier Market Buzz. Dad, let's first talk about December retail sales report. What did you think about it?
Well, it was outstanding. 10 out of the 13 categories rose. Obviously, it came in better than expected. And you're showing a chart from Ed Yardeni that shows just how strong retail sales were across all the categories. So again, outstanding, good for GDP growth. And so that's great news.
Chairman Powell testified in front of Congress. Any insight?
Well, unfortunately, the hearing was mostly about the subpoena he announced that the Fed got. So essentially, the Fed is spending $2.5 billion on their Washington, D.C. facility. Obviously, President Trump thinks that's outrageous, and there's cost overruns, et cetera. So obviously, President Trump is also trying to intimidate Jerome Powell to retire. So it turned out to be just a sideshow. A couple things we should mention. All these Federal Reserve banks hold a lot of cash, and obviously they have to build a fortress to protect that cash. And I probably should tell you an interesting story. I remember I was flying from Fort Lauderdale to New Orleans one day on Southwest, and they came in, the pilot and everybody came in the cabin and explained that we would have to sit in the back because there were very few people booked on this flight. And why we had to move to the back is the Federal Reserve was putting all this money in the cargo hold. Okay. And so I watched the money go up. It was in these big green bags. And then, of course, a man with a gun rode in the cargo hold. This is where you'd put your dog and stuff. So that's probably why the building is so expensive, is because it has to be built as a fortress. The big Fed news this week was, of course, the Beige Book survey, which came out on Wednesday. And what happened is only 2 of the 12 districts said they had slight inflation. The other 10 said they had bubbling inflationary pressure. I didn't like that Beige Book survey because that means the Fed's trying to find an excuse not to cut interest rates. So I think that's interesting. If they do cut, they mostly have to cut for labor market reasons. But apparently the people on the Fed think inflation is bubbling, even though we're not seeing it in the PPI or CPI.
And we saw a big jump in existing home sales in December. Do you think this could be the start of a broader housing?
Well, it could be the start. December is obviously a seasonally weak month, but that was the strongest surge in home sales in 2 years. Now, mortgage rates have come down and prices tend to be soft because homes have to sit a lot longer to sell. So it's a good start, but it's also a signal that if we can get mortgage rates down significantly, then maybe this will continue. This is a big part of the economy. Residential investment has been a 5.1% drag on GDP growth in the second and third quarters. So the fact that we're now growing over 5% with a housing drag is a big deal. So this is why President Trump is intervening in the mortgage markets. He's diverted a bunch of money to buy mortgages, shove the rates down. The Fed, to their credit, is trying to get short-term rates down with their market intervention. I hope that's the start of something big, but the big selling months are, of course, in the spring, and we have to see if it carries over to then.
All right, let's turn to earnings. There's a lot of big names reporting next week. Let's start out with 3M. What do you expect for their report?
Well, their sales are supposed to be up 3.7%. Their earnings are supposed to be up 7.3%. There's minor analyst cuts. 3M has a good earnings surprise history. Now, this is a big multinational, and I don't think any of the multinationals will be that spectacular because once you leave the U.S., economic growth around the world is pretty anemic. They're doing a lot better than they have been doing in the past.
How about D.R. Horton, especially given what we're seeing with housing?
Well, their sales are supposed to be down 12.6%. It's supposed to be down 26.4%. There are analyst earnings estimate cuts, and they have an erratic earnings surprise history. So I'm not that optimistic on D.R. Horton, but if they can surprise or provide more upbeat guidance, that would help. But I expect this stock to remain weak.
Netflix reports after the close. What's your outlook here?
Well, this is a big one. Their sales are supposed to be up 16.8%. Their earnings are supposed to be up 29.5%. But they had a big miss last quarter, and the Warner Brothers acquisitions is still hanging over the stock. Now, if Paramount gets Warner Brothers and Netflix doesn't, they're going to get a multi-billion-dollar payment. So we'll see. The other issue with Netflix is, they're trying to get into sports, but every time they stream a football game, it's digital. So they've got some issues out there, and of course, everybody wants to know, are they adding subscribers? But this company is going to be more about its guidance going forward and comments on the Warner Brothers acquisition, and then we'll take our cue from there.
United Airlines is another closely watched name. What should investors focus on?
Sales are supposed to be at 4.4%, but earnings are supposed to decline 9.8%. They have a good surprise history. There are lower fuel costs right now. So I think that's helping all the airlines, the cruise ships. The one thing I would say about United, there's no snow in the Rocky Mountains. And I don't know if that's affecting their Denver hub. But, if we get a lot of snow, they'll get a lot more flights. So we have to keep an eye on that. But, it's a big airline. It's got a lot of hubs everywhere, of course, Chicago, Denver, San Francisco. They're big in Newark. So they've got some good hubs. But I think they'd like to see some snow so their Colorado business takes off.
Johnson & Johnson reports midweek. What are your expectations?
Well, sales are up, supposed to be up 7.3%. Earnings are supposed to be up 22.1%. They have a good earnings surprise history, but it's pretty small. So I expect another surprise. The drug companies are increasingly onshoring, and the more they onshore, the more they're going to prosper because that's the Trump mandate. And of course, that's been one reason our trade deficit is falling. So I have hope for Johnson & Johnson.
Halliburton gives us a read on energy. What are you looking for?
Well, this is, of course, a big oil service company. Their sales are supposed to be down 3.6%. Earnings are supposed to be down 22.6%. There are positive analyst earnings revisions, though, recently. And this company has a good earnings. Well, it actually had a really big earnings surprise last quarter. So it might get more upbeat. Halliburton is notorious for doing huge mega oil projects. Well, I really got to see their guidance.
Let's move to Procter & Gamble. How does this one look?
Well, this is another big multinational. Their sales are supposed to be up 2.1%. Earnings are supposed to be down 0.8%. There's some minor analyst estimate cuts. But this company, 3M, has a pretty good earnings surprise history. So I have hope for Procter & Gamble. But again, this is a multinational. Once you leave the United States, economic growth is very anemic. So that's their headwind right now.
Intel had a big surprise last quarter. What are you expecting this time?
Yeah, that's going to be interesting. Sales are supposed to be down 6.3%. Earnings are supposed to be down 37.4%. But yeah, as you point out, they had that huge surprise. So we'll see if they can surprise us again. President Trump made them do an alliance with NVIDIA. Just so you know the history of this, the Biden administration gave Intel a bunch of money to build a semiconductor plant in Ohio. And it didn't happen because the Defense Department was supposed to order $2.5 billion a year in chips from Intel, and they reneged. So due to the internal government issues, Intel got money but never built the plant. So President Trump basically demanded equity in the company. And then once the U.S. had equity, he demanded that NVIDIA and Intel collaborate together. So we'll see if this NVIDIA alliance helps Intel, but like a lot of stocks, their guidance is going to be crucial.
Capital One has been strong. Does that continue with this report?
Yeah, their sales are supposed to be up 51.5%. Their earnings are supposed to be up 33.8%. There's positive analyst revisions, and this company does have a great earnings surprise history. Now, of course, this company is an extremely aggressive credit card lender. See, President Trump wants to cap the credit card interest rates at 10%. And the stock got hit on that news. President Trump also called Senator Elizabeth Warren to try to get her backing for his proposal. So this might affect Capital One's business plan and profitability going forward. So despite their anticipated great results, they're going to have to give us some good guidance on the future moving forward.
CSX is a good economic bellwether. What should investors watch?
Well, this is, of course, a railroad. Their sales are supposed to be up an anemic 0.2%. Earnings are supposed to be down 1.5%. There were minor analyst cuts. But they did post nice earnings surprises in the past 2 quarters. Railroads are very, very dependent on, transporting ethanol from the heartland, from transporting agricultural items, and just commerce in general. The fact that manufacturing is contracted for 10 months is probably weighing on this. And it's tough in the farm patch still. So, I really have very low expectations for CSX. We'll see what their guidance is.
And finally, SLB. What does this report tell us about global energy demand?
Well, this is Schlumberger, and it's a big oil service company. Their sales are supposed to be up 2.8%. It's supposed to be down 19.2%. They did post pretty good earnings surprises in quarters. We should talk about the energy patch. Crude oil is very sensitive to what's going on in Iran right now, and it was rising. Now it's, as I talked to, is starting to fall back. Obviously, President Trump had put the 25% tariffs on any country doing business in Iran, and he's trying to cut off the Iranian oil from the world markets. So, the oil service companies are very sensitive to big projects and demand. But because President Trump has sent 3 missile destroyers to the Middle East, he's sending an aircraft carrier there. He's obviously trying to intimidate the leadership of Iran because obviously the people have been revolting for 3 weeks. It's reported at least 2,500 people have been killed. It's very unclear whether they're executing people. We're supposed to start doing that. And they obviously want the regime to fall in Iran. And if that happens, Iran could join the global community and stop being a state-sponsored terrorism. So this is all affecting the oil markets around the world. The other reason I don't want to do this now is worldwide demand for crude oil is very weak in the wintertime. In the spring, it's going to pick up. So this is part of the chaos in the oil patch. Of course, we have the whole Venezuela issue as well, and the U.S. has seized that oil, and I guess we're supposed to give that money to the people if the leftover regime and authorities in Venezuela cooperate with the Trump administration. When Exxon met with President Trump, they were very reluctant to go back in Venezuela because they've been burnt before. Plus, Exxon is so busy in Guyana. So, that's one reason these oil service stocks just might not be as exciting as you might think. But as soon as crude oil prices start to rise, they'll get very busy very quickly.
Well, plenty to watch as earnings season heats up. Thank you all so much for watching. Please give this video a like and subscribe if you haven't already. But we will see you next Wednesday for a midweek update.